You sold your car for $12,000, cash in hand. You walk into your bank, hand the teller the money, and think nothing of it. 2 weeks later, you get a letter. Not from your bank, from the federal government. That scenario plays out thousands of times every single year across the United States. And the people experiencing it are almost always completely honest, law-abiding Americans who had no idea that depositing their own legitimately earned money could trigger a formal government report. Not because they did anything wrong, but because they crossed a threshold they never knew existed, and because they did not understand what happens next when they do. This video is going to change that, because in 2025 and 2026, banks are applying these verification and reporting rules more consistently and more carefully than at any point in recent memory. The combination of updated Bank Secrecy Act enforcement, expanded suspicious activity report filing, and the rollout of new payment integrity tools means that large deposits are receiving more scrutiny today than most Americans realize. And the seniors, retirees, and everyday account holders who are most likely to be caught off guard are the ones who never had anyone sit down and explain the rules clearly. So let us do exactly that right now. Subscribe and hit the bell so you never miss an update like this. Leave a like if it helps, and drop any questions in the comments. I read every single one. Now let us talk about what actually happens when you deposit a large amount of money. The rule that sits at the center of all of this has been federal law since 1970. It is called the Bank Secrecy Act, and it requires every bank, credit union, and financial institution in the United States to file what is known as a Currency Transaction Report, a CTR, with the Financial Crimes Enforcement Network, a bureau of the U.S. Treasury Department, anytime a customer deposits or withdraws $10,000 or more in cash in a single transaction. The word cash here is important, and we will come back to it. But the core rule is simple. $10,000 or more in a single cash transaction, and your bank is legally required to report it. No exceptions, no discretion. It is mandatory. What the report contains is equally important to understand. When your bank files a currency transaction report on your deposit, it includes your name, your address, your social security number, your account number, and a description of the transaction. That report goes to FinCEN and is accessible to law enforcement agencies, including the IRS. This does not mean you are being investigated. This does not mean you are suspected of wrongdoing. It is simply a tracking mechanism that federal law requires banks to maintain as part of the broader effort to detect money laundering, tax evasion, and other financial crimes. If your deposit is legitimate, and the vast majority of large deposits are entirely legitimate, the report sits in a database and nothing further happens. But there is a second layer to this system that most people do not know about. Separate from the mandatory currency transaction report for deposits over $10,000, banks are also required to file suspicious activity reports, SARs, whenever they identify transaction patterns that suggest unusual or potentially illegal financial activity. And the threshold for a suspicious activity report is lower and far less predictable than the $10,000 cash rule. Any suspicious activity involving more than $5,000 can trigger a SAR filing at the bank's discretion. The bank does not need to tell you a SAR has been filed. In fact, federal law specifically prohibits them from informing you. Now here is where things get more complicated and more relevant for everyday account holders who are not dealing in large cash amounts. The definition of cash under these reporting rules is broader than most people realize. It does not just mean physical dollar bills and coins. For reporting purposes, cash includes foreign currency, cashier's checks, money orders, bank drafts, and traveler's checks. This catches people off guard regularly. If you receive a settlement payment by cashier's check and deposit it, depending on the specific circumstances and the amount, reporting obligations may still apply on the issuing institution's end. If you receive payment in money orders and deposit them together, same thing. What these rules do not cover is equally important to state clearly. Personal checks from individuals do not trigger currency transaction reports. Direct deposit payments, including Social Security, pension payments, and payroll do not trigger these reports. Wire transfers operate under a separate regulatory framework. Standard debit card transactions do not generate CTRs. So if your regular financial life consists of direct deposits and personal check payments, the $10,000 cash reporting rule is unlikely to affect your daily banking experience. However, the suspicious activity report system operates independently of the $10,000 threshold, and it is where most ordinary people get surprised. Banks train their staff to flag unusual patterns. Multiple deposits just under $10,000 within a short period, a practice known as structuring, is both illegal and one of the most common triggers for a SAR. It is illegal even if the money is completely legitimate and you have paid all your taxes on it. The law does not require criminal intent for structuring to be a violation. Simply making a pattern of deposits designed to keep each one below the reporting threshold is illegal, regardless of where the money came from. If you have ever thought about splitting a large deposit into smaller ones to avoid bank reporting, do not. That decision creates far more legal exposure than a single large deposit ever would. Let us talk specifically about the situations most likely to affect retirees and seniors who may be handling larger sums of money during specific life events. Selling a home, a vehicle, or a valuable personal possession for cash. Receiving an inheritance. Closing out a savings account or CD at one institution to move the funds to another. Receiving a lump sum payment from a retirement account, an insurance settlement, or a legal settlement. All of these are situations where a retiree might legitimately find themselves depositing a significant amount of money and wondering what the bank is going to do with it. The answer in all of these situations is the same. If the deposit involves $10,000 or more in cash or cash equivalents, your bank will file a currency transaction report. This is not negotiable, and it is not something you can prevent or delay. What you can do is be prepared. When you make a large deposit, bring documentation showing the source of the funds, a bill of sale if you sold a vehicle, a letter from the estate if you received an inheritance, a closing statement if the funds came from a home sale, a distribution statement from a retirement account. This documentation does not go into the CTR itself, but it gives you a clear paper trail that explains the deposit in case anyone ever asks. Being transparent and having documentation ready is the single most effective thing you can do to protect yourself. Banks are not trying to create problems for honest depositors. They are following federal law. And depositors who can clearly explain the source of their funds have nothing to worry about beyond the routine filing of a report that sits in a database and goes nowhere. Here is what the verification process at the bank actually looks like when you make a large cash deposit, so you know what to expect and are not caught off guard. When you approach a teller with a deposit that meets or exceeds the $10,000 reporting threshold, the teller will ask for a government-issued photo identification and may ask about the source of the funds. They are required to collect this information as part of the CTR process. Answer honestly. There is no right to refuse this request if you want to complete the transaction. The teller will complete the CTR documentation using the information you provide and submit it to FinCEN. The transaction processes normally. Your funds are deposited into your account, and you leave the bank with your receipt, just as you would after any other deposit. The process is straightforward, and for an honest depositor, it is nothing more than an administrative step that takes a few extra minutes. The complications arise when depositors are not prepared with identification, when they become agitated or evasive when asked routine questions, or when the pattern of their deposits triggers additional scrutiny beyond the standard CTR. None of those complications affect you if you walk in prepared, answer questions honestly, and have documentation of your fund source available. Here is the complete confirmed picture. The $10,000 cash reporting rule has been federal law since 1970, and banks are required to file a currency transaction report for any cash deposit at or above this threshold. The report goes to FinCEN and does not automatically mean you are under investigation. Banks also file suspicious activity reports at their discretion for transactions above $5,000 that appear unusual, and you will not be notified when this happens. Structuring deposits to stay under the $10,000 threshold is illegal, regardless of whether your money is legitimate. The cash definition includes money orders, cashier's checks, and foreign currency in addition to physical bills and coins. Regular checks, direct deposits, and wire transfers operate under different rules. Documentation of your fund source is your best protection when making large deposits. One important reminder before we close. Scammers regularly call people claiming to be from their bank or from FinCEN, saying that a deposit has been flagged and that they must pay a fee or provide account details to clear the report. No legitimate bank or government agency will ever call you unsolicited about a deposit report and ask for money or account passwords to resolve it. If you receive a call like this, hang up immediately and call your bank directly using the number on the back of your debit card. Your money is legitimate. Know the rules and move it with confidence. If this video helped you understand something important about how your bank handles large deposits, please share it with someone who needs to know. Subscribe and turn on the bell notification so you never miss a verified update. Leave a like if this was helpful and drop a comment below. Have you ever made a large cash deposit and been surprised by the questions your bank asked? Tell me what happened. I read every comment, and your experience helps other people in this community understand what to expect. Thank you for watching, and I will see you in the next update.